price is predictable. The conditions around the marketplace is predictable. High probability and low probability can be determined, framed, and you can learn to anticipate when it's probability that is against you, when you're going to have more adversities than you would care to have any other time. Usually it's the times when you have hurt yourself, draw down, blown accounts, confusion, high anxiety trading, high anxiety analysis without even pushing the button, and not really understanding what causes it. And you're learning now how to place more emphasis on determining the characteristics of the marketplace that you're trying to either trade in, or that you're going to be comfortable saying, you know what, I can see the price is fluctuating just like everybody else around the world watching that same price. But I know enough about myself, I know enough about my model, and I know enough about the inherent risks, the uncertainty of profitability in certain financial climates. That means, is the market predisposed to hurt you and anyone else that participates in it? And that's kind of like the emphasis for new students on non-farm payroll week. That's what I'm trying to capture your attention in regards to the unrealized, until it's too late, risks that comes with trading that week. Everybody hears the success stories of how someone did this and someone did that on non-farm payroll. I made this much money. I made that much money. I'm able to get a withdrawal for this much money because I killed it on non-farm payroll. And you're learning that there is a lot more to it than just getting lucky, surviving that carnival ride. And while most retail traders, people that use logic that has no bearing on why price is going to go up or down, they will subscribe to the view that, hey, their techniques, their models, even my concepts in the hands of other people, they may sell the idea that, hey, look, I got it all figured out. And as I mentioned, every single time I've ever talked about non-farm payroll, I said the same thing Friday. I said, you don't know. No one knows where it's going to go. And inviting ruin, inviting the potential for the market to just start spooling and running way beyond where you think it's going to go. Ignoring that underlying risk, ignoring it, discounting it, thinking it's not going to happen to you. Not this time. You're romancing the uncertainty. You're only looking at it from the perspective that it's going to be good for you. It's going to be good. It's a good thing for me to do this. That's what you tell yourself. That's what you're thinking. In reality, you're most likely anxious. That's why you never said anything in front of the public about what you were doing. But when it works, you're going to come out and show your market replay execution. Look at this. Look what I did. I killed it. If you were that confident, you would have done it live. You would have done it in advance. And the fact that you won't do that, or that you see other people doing it just like that, it's cause for concern. You're spending too much time doing the wrong things, worrying about the wrong things, and romancing the uncertainty, only seeing it through rose-colored glasses as an expression that you can only see it your way, or the good side only, and not realizing the underlying risks that are associated with it. So I want you to think about what you watched this week. I want you to think about how we were able to navigate. At the beginning of the week on Monday, I told you what the weekly objective would be. And once it delivered to it, guess what? That was it. We were looking for that weekly buy side and balance, sell side efficiency to be traded down into. And it was just off by a little bit before closing it entirely to the downside. And that's all it did.